Good morning. So today's video is about support and resistance and the best way to mark support and resistance and incorporate support and resistance into your trading. Without support and resistance, it is impossible to just use indicators and enter at the right positions. What support and resistance does is that it allows you to enter at a very specific point on the chart. So let's choose any stock. For example, let's go to Apple. So support means that any point in the chart where the price has taken support and it could not breach that price, and after hitting a particular price it bounced up, that is support. And resistance is where at a particular price went up, hit that price and fell down. Again, the price went up, hit a particular price and fell down. Price went up, fell down. This is resistance. The more number of touches a resistance line or a support line has, the stronger it is. And the second thing that is important to note, that suppose a resistance line. So see, the price goes up, hit this price which is 192. You can see here it is 192.74. It hit the price, fell down, and this time it breached the price. This particular resistance zone was breached. So, and then it took exact support at this particular resistance line. So what it shows is resistance line once breached turns into support. See, this was used to be resistance, price could not pass it, fell down, this time with a green candle broke through this resistance here, took support, went up again, took support at this earlier resistance line, now changed to support line, and now this time it broke this support line, and now it broke the support line. So this is how resistance can turn into support and support can turn again into resistance. So when we start marking in our chart, we always start from monthly and we give maximum weightage to the current price where we are right now. So we are on the monthly chart, we are on this candle. So any support will be the closest below it and any resistance will be closest above it. There is no point of marking resistance and support lines far away from this candle because it will take time to reach those zones and there is no point of marking those zones. So I am only interested in marking the closest lines to this current candle. So we are here the price is approximately 179.66 right now. Apple is at this price, on the monthly chart. Now let me mark the price, the resistance at this zone because there is a sharp wick here which indicates that the buyers tried to cross this price but could not, and then the price fell. So I'll click Alt plus H on my screen. You can also select it from here. Click, and this horizontal line, I've marked it as a star, so it will always be here in my favorites. After you have selected it, you can just click Alt plus H on your keyboard and it will mark either a resistance or support zone. So I clicked Alt plus H. You can left click your mouse on this and select the color. I'm keeping this yellow because I want to see this as a monthly zone in yellow color or a weekly or daily. Monthly, weekly, daily are our main time frames, which are major time frames, and I want them to be represented by yellow. So whenever I see yellow on my screen, I will know that this is a major support or resistance zone. Okay. Now I can maybe also mark this as a support, because you notice that this green candle has a wick here. Again, the price went up, hit the resistance zone, fell down till here, and took support again at this point. So this I will mark again Alt plus H as support. Now let's go to the weekly chart. On the weekly chart, you will get more wicks and you will get a better idea of support and resistance. So let's mark something that we can find. This used to be a resistance zone somewhere close to here, 1, 2, then 3. So again 4 very close to it, but then here the price breached the resistance zone. So this is not valid anymore. So that's why I'm not uh, marking this. If the price had fallen and took support at this line, then I would have now marked this as a support zone. But then this line is not getting respected anymore. As you can see, it's the price has gone through it, again above it, again through it. So this is not valid anymore, this past price. So that's why I'm not marking this. So in weekly, I cannot see any specific additional point being respected. Let's go to daily. Let's use our mouse scroller and make the candles bigger. Let's see if I can find anything. See, I would mark this as support. 1, 2, 3. The price is again there. See, 4, 5, 6. Slightly the price tried to go through this, but then it's an indecision candle where the price tried to go down, sellers came in, then it became bullish with a bullish pin bar. This is called a bullish pin bar, and buyers basically ended the day with the price being higher than what the sellers intended it to be. So I will see these two, and I will mark and also these wicks, and I'll mark Alt plus H, a support zone here. This is a fake out. We call this as a fake out, where the price, you know, it fakes out a lot of buyers at this point, because usually you will put your stop loss if this candle had not happened, and you will usually put your stop loss under this support zone, that if it breaks, then you are out of the trade. So, this is how the market works. The market eats up people's stop losses and then it will go in the intended direction. So, we usually call this a fake out. Fake out for traders who have put their stop loss just below this support line. So when I see a fake out like this, I'm usually more confident about this fake out, this support zone, which has so many touches. So I'm expecting Apple to go up from this support zone. Now we can go to the 4-hour. In the 4-hour chart, you will get to see more wicks and candles. See here, this can be a resistance zone. 1, 2, 3, 4, somewhere here maybe. Alt plus H. Because this is 4-hour now and not daily, weekly or monthly, I'm changing this color to blue so that I know that it's 4-hour or 1 hour. Major time frame support and resistance zone is what you need to be trading from, even 4 hours. So suppose you are at this price and the price crosses this support zone that we had marked, you are going to go long here and your trade is going to last till this resistance zone. Or if the price is here and it starts showing few reddish candles on the smaller time frame, then you can go short here till the lower support zone. So What I mean to say is that you should use your indicators to confirm when you want to go long on a support zone. You should use your indicators only to confirm near a support zone or take a short near a resistance zone. Your indicator should only help you confirm your hypothesis, what your support and resistance zone is already telling you. So if you're not close to a support or resistance zone, you should not be using your indicators for trading at all. Your trades should only happen very close to one of these zones, either to go long or to go short. Hope you like this video. Please follow and like and subscribe, and leave in the comments what other videos you would like to see me make, and I would be very happy to make those videos. Thank you.